Have you ever wondered what could have happened if you invested $1,000 in SOFI in 2021? Today we'll be scrutinizing the financial performance of SOFI, one of the leading fintech firms in the United States. We'll examine aspects like income, profit, assets, loans held for sale, and cash flow. In doing so, we hope to provide a comprehensive analysis that can help guide investment decisions. With that said, let's dive into the financial performance of SOFI. First things first, let's talk about SOFI's total income. The year 2023 saw the company raking in a total income of $2.9 billion. That's a growth of 164% from the $1.1 billion in 2021. The annual total income growth was 64% from 2021 to 2022, and 61% from 2022 to 2023. 2023's income came from two primary sources: interest income, which made up 69%, and non-interest income, contributing 31%. It's worth noting that SOFI has been gradually withdrawing from the cryptocurrency market due to the increasingly stringent legal regulations in this field. Instead, they're focusing on their core banking operations. Now let's break down the income growth a bit more. The majority of the income, around 69%, came from interest income. This is a testament to SOFI's ability to generate a profit from the difference in interest rates between deposits and loans, also known as the net interest margin. The remaining 31% of the total income in 2023 was non-interest income. This income doesn't come from interest on loans or investments. Instead, it's from fees for services, gains on sales of investments, and other miscellaneous sources. It's worth noting that SOFI's shift from the crypto market to traditional banking has been a strategic one. Given the legal complexities and volatility associated with cryptocurrencies, SOFI has decided to focus on their core business. This move has allowed them to better manage risks and concentrate on a more stable source of income. So, the income side looks promising, but what about the profit? Now let's take a look at SOFI's net profit. In 2023, the net profit margin was negative 10%. While this may seem alarming, it's important to understand that it's a marked improvement from negative 45% in 2021 and negative 17% in 2022. The net profit in 2023 was negative $300 million, showing a positive trend compared to the negative $500 million in 2021. This indicates that the company's net losses are gradually decreasing. The net profit in 2023 is composed of two main parts: net interest income and net non-interest income. The net interest income was $1.2 billion. On the other hand, the net non-interest income was negative $1.5 billion. The loss from net non-interest income mainly stemmed from various expenses. These included technology and product development costs of $500 million, sales and marketing costs of $700 million, cost of operations of $400 million, general and administrative costs of $500 million, and a goodwill impairment cost of $300 million. It's important to note the goodwill impairment cost in 2023, as this was not a factor in previous years. Additionally, the net interest margin, or NIM, in 2023 was 4.4%, up from 3.9% in 2021. An increasing NIM indicates SOFI's advantage in making a profit from the spread between the interest rates on loans and deposits. So, we've seen some positive improvements in profit, but let's not forget about the assets. The company's total assets in 2023 were $30.1 billion, a significant increase from $19 billion in 2022. However, the net assets remained consistent at $5.2 billion in both years. The equity to total assets ratio was 17% in 2023, down from 27% in 2022, indicating a slightly higher financial risk. Let's now shift our focus to SOFI's loans held for sale. In the financial world, loans held for sale refers to loans that an institution, in this case SOFI, intends to sell in the secondary market. This strategy can provide liquidity and reduce credit risk, making it a potentially beneficial move for the company. Over the past few years, we've seen a steady increase in SOFI's loans held for sale. This figure stood at $4.9 billion in 2020, increased to $6.1 billion in 2021, and rose dramatically to $13.6 billion in 2022. By the end of 2023, the figure had further escalated to $15.4 billion. The increasing trend of loans held for sale could be indicative of a strategic shift within the company. It suggests that SOFI may be leveraging the favorable market conditions to offload loans and generate revenue. This approach can be particularly profitable in a market with high demand for loans, which allows SOFI to sell the loans at a premium. However, it's also important to remember that while this strategy can bring about potential benefits, it's not without risks. The profitability of loans held for sale is heavily dependent on market conditions. In a less favorable market, the demand for loans might decrease, reducing the premium that SOFI can charge. This could subsequently affect the company's profitability. Moreover, the increasing loans held for sale also have implications on the company's cash flow. The cash flow can be influenced by changes in loans held for sale, and in 2023, we saw a significant decrease in SOFI's cash flow, primarily due to this particular factor. In conclusion, while loans held for sale can be profitable, it's also crucial to consider the cash flow. Understanding the balance between potential profits from loans held for sale and the associated cash flow is key to making informed investment decisions. Finally, let's look at SOFI's cash flow. The financial year of 2023 reported SOFI's operating and free cash flow at a negative $7.2 billion, showing a substantial decline from the negative $1.4 billion reported in 2021. This downward trend in cash flow might raise some eyebrows. The primary contributor to this decline is the changes in loans held for sale, which amounted to a negative $7.8 billion in 2023. The increase in loans held for sale suggests that SOFI is ramping up its lending activities. While this could potentially yield higher profits in a favorable market condition, it also presents a risk if the market conditions were to deteriorate. It's important to note that cash flow, while crucial, is just one aspect of a company's financial health. When analyzing SOFI's performance, one must also consider its income, profit, and assets, as well as the trends in these areas over the past few years. To sum up, SOFI has shown some positive trends, such as a growing total income and an improving net profit margin. However, it also faces several challenges, like a decline in cash flow and increasing loans held for sale. As an investor, it's crucial to consider these factors before making any investment decisions.